Hey guys, it's Steven here. Most of what mainstream media shows about Tesla is pretty funny. In this video, I'll react to a segment from CNBC's Squawk Alley and clarify two drastically different views about Tesla's valuation.
Pushing above that $700 mark today. Now it's $714. What does Tesla need to stay at this level or push even higher in 2021?
So, the big question I get from the buy side is what's going to pull the luster off Tesla, right? So where they are now, they can basically invent their milestones. They're strictly in story stock territory. They can tell people they're going to have an event, hold the event, and break out the pom-poms because they got the cheerleaders on the sidelines.
Greg Irvin, Wall Street analyst from Roth Capital Partners, is a prime example of a funny Wall Street analyst appearing on mainstream media. He has Tesla at a price target of only $150 and believes that only stories are keeping stock prices up. Maybe he should consider the future of Tesla in the energy business, the huge lead Tesla has when it comes to the data needed for autonomous driving and the potential for revenue for that software as a service, or the ever-improving battery technology.
I do not have any negative catalysts. I upgraded the stock to neutral earlier this summer, saying that we've got India and the mini car coming in 2020. It's just come out in the last week that they are preparing deliveries for India in January. India will be just as important as China.
Craig does bring up a great point here. Tesla is expected to enter India, the second largest market in the world by population with over 1 billion people. And Tesla is expected to release a more compact version of their vehicle. This can happen over the next 2 to 3 years. This compact vehicle will also see a significant use case and popularity in not only India, but Europe as well, because of the compact layout of the European cities, and easier parking for the dense cities in Europe. Somehow, Craig does not paint this big future market expansion in a positive light.
But stepping back, this $675 billion market cap, man, that's a big market cap for a company that's only going to produce maybe just a little over their half a million car bogey for this year. So
why is he comparing the current price of Tesla to the amount of vehicles Tesla has produced in 2020? Tesla is currently on a growth trajectory, and they'll likely produce 1 million vehicles in 2021, 2 to 3 million in 2022, and eventually reach 20 million vehicles produced per year as their goal.
It's going to be interesting to see how the story evolves. I don't see the luster coming off Tesla, and that's the big question I get from the buy side.
Right. And Emmanuel, there's this thinking that, yes, it may be hard to justify that valuation, nearly $700 billion, if you think of Tesla only as a car company. But many this year have started to think of it more like a tech company. What, in your mind, or how could Tesla lose some of that luster next year?
We're bullish Tesla, so we don't expect them to lose any luster. 2020 was a great year for the stock.
2020 was a huge year for Tesla, with around 700% gain in the stock, and people just starting to realize the potential of Tesla. 2021 will be all about execution to justify the price, and Tesla can do this by taking their experience abroad to their gigafactories in Shanghai, Berlin, and Austin as the buildings get closer to completion.
I think 2021 is going to be a pivotal year for Tesla in terms of the actual business model. We're going to see growth acceleration in terms of number of vehicles sold, more markets, multiple factories being open, new vehicle models, basically pretty much firing on all cylinders or their electric vehicle equivalent. And to your point, I think that the work they're doing on the cost of batteries, trying to cut that in half again over the next couple of years or so, could unlock many larger markets, even stationary storage, commercial vehicles for sure. And so I think investors have started incorporating some of that into their thinking about the stock. It's not just a dominant electric vehicle player, one that's prompting adoption. It's one that can also do very, very well in other markets, benefiting from its capacity and investments in batteries.
The energy business associated with the advances in battery storage capacity is the next big market for Tesla to capture. Elon Musk has mentioned he sees Tesla's energy business as a major player in the future. There are trillions of dollars to be made in this sector, as major energy companies make up a good portion of the top 100 companies in the world.
Yep. Emmanuel, though, I wonder, with a $680 billion market value as of this very moment, with the stock up another 3%, how much of that future that you're talking about is already discounted?
It's a great question. Look, when Tesla was the anomaly and it was just this stock with a high valuation, you would think, okay, maybe something's wrong, it's going to come back. there has been a lot of new electric vehicle investments coming to the market. A lot of them have done extremely well, and a lot of them are trading at similar valuations. I mean, NIO, Xpeng have actually higher EV to sales multiple than Tesla currently. I think investors are very clearly saying they're looking to play a secular theme. They're looking for growth. Electrification is really at the beginning. We're talking about a few percent of global auto sales that are electrified. Could it be closer to 100% by 2030? I mean, this is really the beginning of a trend. And so, yes, on near-term metrics, it's expensive, but once you start looking out beyond it, I think that it's actually very reasonable for the growth that it offers.
Hope you guys enjoyed this video reacting to and clarifying mainstream news about Tesla. If this is the type of content you enjoy, go ahead and hit that like button and subscribe button. See you guys next time.